Hello and welcome to Good Returns. My name is Shruti Sarkar, and today we have Amit Chabra, Chief Business Officer of Policy Bazaar. A warm welcome to Amit. Thank you for joining us.
Thank you. Thank you, Shruti. Pleasure to be here.
Um, I will straight get to the point. We The interim budget is on 1st of February, and everybody is talking about it. It's a vote on account budget. So the main full budget will be only after the Lok Sabha elections in July. So if I had to ask, what is your overall view of the budget? Something that you're expecting, something probably you're not expecting. Let's talk about it.
See, I think while I understand this is this may not be this is like an interim budget, but I think it is. I would say at the same point it is also very important, with upcoming elections, etc. Right? So we would expect some concrete decisions, measures, etc. being taken, and see, you have to also look at the macro picture where India is today, in the entire world economy. A lot of economies in the world are struggling right now. There is inflation, interest rates are very high. A lot of countries, in the Asia region are struggling because of various things. I think India, is coming out as a very shining example right now. It's coming out a very shining example of a country which is being managed very well, financially very, 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 very stable and growing, and working on the right things. Make in India is a big initiative which is helping reduce deficits and sort of making India more and more self-sufficient. So I feel that that is the theme that the budget will also tend towards, where we try to promote the core, I would say, the core feelings or the core sort of benefits which as a country we are working towards. So, for example, promoting manufacturing in India instead of importing, I think that is one key theme that everybody's been working on. Lot of stuff has happened around that. So that we see that going forward as we get into the budget. I think the one key area where again a lot of work has happened, and I'll go slightly into financial services and insurance as a
Sure.
category, is that there has been a lot of work that the government and the government authorities around insurance specifically. So just to give you a sense, 5 years back, insurance was very tightly controlled, which meant that making any changes in insurance was difficult. Launching new products, making changes in insurance policies was very difficult. What has happened in the last 5 years is, with great support and great leadership by the IRDAI and the government of India, insurance has become a very, very progressive, extremely progressive sector. Uh, Companies are now able to launch products on the fly. There is no approval required, which earlier was a long, tedious process. Now it is something called use and file, which means you can actually start selling a product and apply for a approval later. So there's a lot more, I would say, liberalization that has happened in the insurance sector also, and that has really helped. You see the growth numbers. Insurance as a sector has been growing rapidly. So I think that theme has also played out over the years, and I think as we look forward to the budget, I feel that the same theme will play out. The one area I feel, or other two areas I feel, where India still lags as a country, and there is still a way to go compared to the more developed markets. I think first is income protection. So by that what I mean is, in very simple terms, if today, if there is a person who's the earning member of a family, and tomorrow, if the person passes away because of some reason, is the income protected for the family or not? I think that is one big thing. And in India, term insurance penetration is quite low. It's
Right.
improving obviously by leaps and bounds, but it still remains quite a low number. So there is no income protection available to a very, very large number of families. So that is one. And second is health protection. That's the other thing. And unfortunately, in the last 3-4 years, COVID came. Medical inflation has gone up significantly. Healthcare has become very, very expensive. So how do you protect your healthcare from a financial standpoint through health insurance? I think that is the other thing where also India as a country struggles a bit because the penetration levels are still quite low. While I think over the last few years, there has been significant growth. There is now more awareness, a lot of stuff that has happened at the insurance regulation end, which has increased this penetration, but still that number is quite low. Different estimates, but typically we see that for voluntary health insurance, the number is as low as 5-6%. Now, this is much lower than where it should be, specifically for a young economy like India, where people don't have those kind of disposable incomes. That if something bad happens to somebody health-wise, they actually will not have any money left. So,
Right.
so I think these are the two large themes I will specifically, I hope that the upcoming budget promotes people to spend on, to think about that, protecting their income and protecting their healthcare financing. I think these are the two things which are extremely important as we go forward.
Sure, sure. Very well said. You did speak about other Asian countries who are going through a really bad phase. For example, I'm sure Pakistan, huge inflation. There's food crisis. There's Sri Lanka, which went through humanitarian crisis last year. Huge debt. So compared to those countries, probably India is doing much better. You also spoke about global developed countries facing high inflation. Yes, considering that the US inflation is still much higher than the Fed's target of 2%. And although it has cooled off from a high of 9%, it is still not there. Probably in India, it's we are in a much better state. However, if like our Prime Minister Narendra Modi said that we are going to be a $5 trillion economy very soon, the third largest in the world. Um in your view, how would that happen? What's your outlook towards it?
See, I think all the key elements I feel are at the right place. There is availability of capital for a business if they want to deploy capital and grow. There is availability of capital. All the core regulatory elements are all in place. Business it's fairly the whole environment is fairly supportive to do business. Uh, in terms of resources, again, India is an extremely young economy. There is a large force of people who are well educated and and who are enthusiastic and open to working. So unlike some of the developed countries, we have a very large young force, which is ready to get into any sector, be it manufacturing, IT, etc. Then I think if you look at all the relevant sectors, so the sectors that are growing, India is increasingly becoming more and more, stronger, be it in terms of information technology, be it, auto as a sector as well. So we're actually, interestingly, what has happened is in India, because of the whole Make in India initiative, that's been taken up. We're seeing Indian companies who are manufacturing in India, they're only growing from here on. So I think that target of $5 trillion is not very far away. I can't comment how much time it will take, but I think it's definitely heading in the right direction. Is how it's clearly visible. And to be very honest, I have a very straight view of things also, because see, if you what we listen to here, that is one. But if you actually listen to what, let's say, people outside the country are saying, that will
Right.
give you a very clear view of what is the picture, right? Because they are not colored by, let's say, what is being written or said. So if you
Right.
listen to a lot of NRIs, a lot of people who are staying outside the country, there's actually a lot of reverse brain drain that has now started. A lot of people want to come back to India now because they realize this is where growth is. This is where capital is increasing. This is where it's much faster in terms of growth versus, let's say, any other developed market. So there's a lot of positivity outside India about India. I think that to me is very
A
simple rule
sign.
of thumb to get. It's a very
Sure.
simple sign as to how India is doing as an economy. So I think, yeah, the target is not very far away, but we have all the right elements in place, and it's just about putting your head down and keep working towards it.
Absolutely. Moving on, you spoke about healthcare expenses, healthcare inflation, which is rising. So, do you think extending tax exemption for healthcare, health savings accounts will benefit the people in the country? Also, I have an additional question. GST paid on employee health insurance makes it even more expensive. So, do you have any suggestions that how the government can incentivize it and make it much easier for probably poorer people?
Absolutely. I think the 2 points that you raise are both very, very critical points. So, see, the first thing is this whole Section 80D, where you get a tax benefit if you buy health insurance. This limit was defined very, like, many years ago. It's not something which is new, but what has happened in the last few years is because of medical inflation, these limits have now sort of become outdated. So just to give you, just to go deep into that, today, if I am 60, I am less than 60 years old, then if I buy a health insurance policy up to 25,000 rupees for me and my family, then I get medical exemption up to that 25,000 rupees amount. But the reality is, because of medical inflation in the last so many years, health insurance
Right.
has become expensive. So that 25,000 rupee limit is actually not sufficient enough for me to support me and my family's health insurance. So what ends up happening is, at times, while some customers do take, they spend more money and get a good comprehensive cover for their family, a lot of people also end up shying away from taking the full amount because that additional incentive of tax saving is gone away. So what I would say is that, one of the things that could be looked at in the budget is if these limits of Section 80D can be extended to match up to the current levels of medical inflation that are there. And I would say one should look at least a 50,000 rupee limit for less than 60 years of age and 1 lakh rupees limit for more than 60 years of age people when they're buying health insurance policy. This will encourage people to buy a good comprehensive health insurance plan for themselves. So that is point number one. This also applies, so point number two is around GST. I think that's another important point. And I would say it's not linked to only corporate policy, as you mentioned, but it's also linked to retail policies as individuals. When we buy our own health insurance policy or even term life insurance policy for that matter, there is 18% GST applied.
Right.
Now, if you take a step back and understand when should a high GST amount be applied, it should be applied where it's some luxury item, it is some discretionary expense. That is when you want to apply a high GST amount, right? So, for
Mhm.
example, if or apply it on somebody who's spending it on non-essential items, I would say, right? So if somebody is doing a foreign trip, you may apply it because foreign trip is not it's a discretionary spend. It's not a mandatory thing to go outside the country or to buy an expensive car. But comparing health insurance or term insurance with discretionary spends, I feel is probably a bit is not right, because health insurance and term insurance are two protection instruments which come handy when hell breaks loose. You may get cancer and you may need to pay a bill of 20 lakh rupees. That is when health insurance comes handy. Nobody has 20 lakh rupees handy with them to just give it to a hospital. Similarly, if the earning member of the family passes away, then you need those 1 crore, 2 crore rupees to to sustain your lifestyle, to pay the school fees of your children, and so on and so forth. These are not discretionary spends at all. Then why should they be coming under the umbrella of 18% GST? I think that part must be looked at very, very carefully and should be
Sure.
addressed in the budget, because one should always promote health protection and income protection, because they are, in the long run, they are essential to a good healthy society, because you don't want people being selling off all their savings or selling off their houses to pay a hospital bill. But
True.
that is what will happen if people don't have health insurance policy. So I think health protection and income protection are two things which have to be only encouraged, and a high GST amount acts as a deterrent to that. So these are the two things that one must look at in the upcoming budget.
Thank you. Very, very intelligent answer. I think this is where we are a little probably different than the developed countries, where policies are very sorted for almost all sectors. Moving on, Amit, I have. So, do you expect any kind of welfare schemes that could be announced in the budget, in the interim budget now?
Again, probably not my place to comment on this, but one of the things that we are hearing from a health insurance perspective is that the health insurance, the universal health insurance scheme called Ayushman Bharat, there may be an extension to that where the sum insured will be increased, and there may be an option for for consumers to pay and extend their coverage. That is something
Right.
that we're hearing. Apart from that, yeah, probably not my place to answer. What are the welfare schemes at an overall level might come up.
Sure, sure. Right. I think I got what I wanted. Amit, is there anything that you may want to add that I may have missed asking you? Please feel free to say.
Sure. So I think one more point I wanted to add. See, India as a again, because we are a young, fast developing, fast maturing economy, one of the things that we've never as a country been very strong on is pensions. So while obviously India has had a history of pensions in the sense that every government job used to give pensions, and that now supports livelihood of a lot of families. But as one that whole structure is now changing. Not every government job is pensionable now. Private jobs are definitely not pensionable. So I think one area where India has been weak is pensions. People don't really work on pension related investment products from a young age, because everybody's thinking of right now of getting money now and and investing that. But what do you do when you're 60, 70 years old, when you don't have a running income and your investments go away? The future may turn bleak because of that. So I think one of the views that we must have and we must work towards as a country is pensions, which means protecting my income when I am not earning as a as an earning member. When I'm 60, 70 years old, when I have no running income, how do I ensure that I get a running income? That is
Sure.
what pensions provides. Now, today there are various pension plans available, but again, as a discouragement, they are actually taxable, which means that if today I invest in a pensions plan, the return that I get after 20, 30, 40 years, it will actually be taxed at an income tax rate. This again, I think, is a big deterrent. And what I would feel is that the income from pension should not be taxable, because that will make sure that it encourages all the everybody to invest in pensions as a category also. And see, today we don't realize how important pensions are, but when we move into a stage where, let's say, today the US or some of the more developed European countries is where largely the population is aged, that is when this will start to hurt. And at that point, a lot of irreparable damage would have happened. So extremely important that as a setup, as a country, as an economy, we also work on pensions. And there should be enough encouragement for every citizen of the country to work on to invest in pensions. The NPS is a great example of that. I think that's a great start. But again, typically the spend there is limited. I think we should be encouraging everybody in the country to spend more on pensions, so that the future, and specifically this, I'm talking about the very long term future, not the next 5, 10 years, but I'm talking 30 years later. I think that future will be secure. So I think that's the other thing we must sort of work towards as we go forward.
Absolutely. Fantastic. Thank you, Amit, for answering all those questions.